Hi everyone. In today's video, we are going to be talking about an easier way to shape your philanthropical legacy. So let's get started. So, IG Wealth Management charitable giving program can be integrated into your overall financial strategy in a way that it will allow you to give to your favorite charities and reduce the overall taxes. So, and IG Wealth Management has an incredible legacy of community support, and we are committed to building a strong community across Canada. Um, in our practice, we actively engage in charitable activities aimed to making a positive impact on the lives of people in our community, and I'm very proud of that. So, when you come to a charitable gift planning, there are eight major strategies you can leverage. So let's look at them. Number one is charitable bequest. Donate publicly traded stocks and securities. Establish a charitable remainder trust. Donate a life insurance policy. Establish a charitable life annuity. Gift a registered plans. Establish a private foundation. And establish a donor advised fund. So every single one of these strategies comes with its own individual set of advantages and benefits. Today, we are going to be talking about strategy is the establishment of your own personal donor advised fund under a program called IG Wealth Management, a charitable giving program. So, IG Wealth Management charitable giving program is a streamlined, cost effective alternative to a private foundation like a foundation like a but it's like a foundation but without the upfront cost and the complexity, and with the tax shelter growth, regular grant can be distributed to the charity that means most to you. The program is designed to help you reach your immediate and long-term charitable giving goals by integrating strategies directly into the existing financial plan. You can name the account personally and recommend grant to desired charity organizations on an annual basis. Charitable giving allow you to give now and in future. So, if we look at the charitable giving program designed for you, the most important thing to remember about IG Wealth Management charitable giving program is simplicity. Enjoy the benefit of private foundation, without all the upfront cost, time commitment, and administrative hassle. It's a streamlined, consolidated approach to charitable giving. Flexibility. Continued contribute cash, publicly traded securities like bonds, stocks, mutual fund, other assets. Consider naming the fund as a beneficiary of your life insurance policy you currently own, your RSP, your retirement registered income fund, or tax-free saving account. The choice is yours. Enhance your giving power. You receive an immediate charitable tax receipt for every qualified donation you make to the account. Your donation now tax free, increasing the size of the grant to the charity you support. Saving. Set up a private foundation can be costly. You setting up your own private foundation, it will require a lot of work and it will be costly. The IG Wealth Management charitable giving program is a low cost way to give significantly without upfront cost. And control you participate actively by choosing the investment strategy for your contribution. After donating, you can choose to be involved in charitable giving process as little as much you want. And finally, which is I think so is a very big benefit, is a multi-generational connection that you can name your successor and engage your family, your kids and your family member to be engaged in the foundation in a legacy. They can be part of the create a legacy fund, and you your family can use as a lasting testament to what you value the most in life. So that's where we are, how it works. So if you look at the minimum amount which is required to open the charitable IG charitable managed foundation account is $10,000. So your minimum you need to contribute, the first contribution needs to be $10,000, and any subsequent contribution has to be minimum 500. So it's not a big amount to start with. The charitable administration fee is 0.55% of the account value each year plus the MER of the selected in fund. Then what you can like you can donate cash, stocks, bond, mutual fund, and life insurance policies to the account. So getting started is a very easy process. The first of all, you can give the account a name, a family name, honor of somebody. You can choose you with a few requirement. You can you or other can contribute. You can name the fund pretty much the way you want, but with few limitation. And you and other can contribute to the fund in future. You can name the successor to take control of the advisory role in the event you no longer able to manage the fund. You, as I indicated in a previous slide, the minimum contribution required to make the open the account is $10,000. You can choose the charities, which is a registered charities in Canada, and whichever cause you believe in. In the first year of setting up the account, the 25% of the value of the account can be given as a grant, and after the first 12 months, there is no restriction how much you can give out. But if you're planning to leave a legacy, you should consider putting giving 5% or kind of range every year out in a grant, because that will make the your legacy last longer. Contribution, you can contribute as frequent as much you wish. The minimum contribution I indicated is $500. Anything above 500 you can contribute, or anybody can contribute, and the tax receipt will be issued for the donation immediately. Now, in this simple example, so we will assume that Alex Jones is individual, her annual income is 300,000 and her marginal tax rate is 50% for sake of simplicity. In 2023, the top marginal tax rate in Saskatchewan is 47.50. So if she decided to donate, and for this practice, we are just going to keep the simple math of 50% of marginal tax rate. So if you donate $50,000 to Joan Family Charitable Account, that 50,000 will produce a tax credit for 25,000. So net cost of that gift is 25,000 for her. And one other thing I will also mention in related to the tax credit, that she can use that tax credit in the year of the she donated to the foundation and the 5 year following after that. So, giving in a partnership, the IG Wealth Management Charitable Giving Program is offered in partnership with the Strategical Charitable Giving Foundation, a non-profit charitable corporation registered as a public foundation with the Canada Revenue Agency and with the Quebec Ministry of Revenue. The foundation provides record keeping, tax reporting, and comprehensive support for the charitable giving accounts, helping donors meet their philanthropical goals. So, opening account, we're going to briefly go through the opening the account and how the account opening and everything works. So, the number one thing, Alex Jones, in our previous example, decided to donate $50,000 cash. Alex is free to name, as I indicated before, name the account however she wants with a certain restriction. For example, she could name the foundation account Alex Jones Charitable Account, or the Jones Family Charitable Account. Every time the grant is sent to the charity, the Joan family charitable account will be cited as a source of the gift. And unless she decided to give anonymously, so it will be cited every time there is a grant is given to the charity. Alex must also name a successor. There is no need to include the provision in her will, thereby acquiring expensive legal costs. Alternatively, she can complete the standing grant recommendation form, which will ensure the grant will be automatically continue to benefit the charity she has selected well beyond her years. So the charities exist, the money will be paid to them. Deciding a successor is a very important step, and it requires some thought. So it will be, you just want to spend some time to picking a person who be a successor and can is able to fulfill the advisory role and continue your legacy the way you want. Now, the second step, Once the account has been named and the succession plan has been established, the next step is to make the initial contribution. In order, as I indicated before, the minimum initial contribution is 10,000. You can make anything beyond that, but 10,000 minimum. And your family, friends, anybody can donate, and they will get the tax slip for that. Any donation made in your account is irrevocable. That, okay, it's one way. When it goes in a charitable account foundation, you get the tax slip for it. It's irrevocable. Once the initial contribution is made, Alex will receive immediate tax receipt for $50,000, which receipt, as I indicated earlier, can use it in that particular tax year or 5 years in future against her taxable income. Now, in so far in this example, we always talked about donating cash, but in the earlier, in the beginning, I indicated that you can also donate in kind securities, mutual fund, bonds, which appreciated in value. So what that means, that if you own publicly traded stock, bond, mutual fund, which you paid 20,000 for it, but the market value of that fund is 50,000. So you can donate that 50, that fund market value in the foundation account. You will get the tax slip, which you can use against your taxes, and the no capital gain will be declared. The other way, if you will take those securities and knowing that the cost is 20,000 and the cap market value is 50, and you will sell them, the $30,000 capital gain will be declared, and at a 45% marginal tax rate, you will approximately $6,750 tax will be due, which will decrease your contribution to the foundation. So in current environment, without going in detail related to 2023 AMT rules, you should donate in kind securities which you don't need, and so in this way that capital gain will not be declared, and it will decrease your net cost to contribute to the foundation. Now, you can also donate the life insurance policy. So in this particular case, if you have a life insurance policy and that life insurance policy cash surrender value is 50,000, you can donate that policy to the foundation. You will get immediate tax slip for 50,000, which you can use against your taxes. And any future payment you will make towards the payment of premium of those insurance policy, that policy, that will be also, a foundation will issue you the tax slip for it. But one thing you have to remember in this picture, that at death, when the death benefit is paid, there to foundation, there is no tax slip, because the tax slip was issued in this particular case as you paying the premium. That's a tax deduction to your current tax years, and the cash value will also was issued in a tax slip. So there is no tax slip is issued when the death benefit is paid. Now, in the same thing, that in this particular example, this is the same example that in Alex Jones case, that if Alex Jones had made $300,000, she started she had marginal tax rate is 50%, and we donated $50,000 in the Jones family charitable account. Her net cost is 25, as she will get the tax credit for the $25,000. Now the when the eligible when the account is set up and everything, then with the help of me, we will help the client to set the appropriate investment allocation in the funds which are available in charitable foundation account. Each year I will sit down with the client and help them to direct the grant, even whichever charity they prefer, or we do the standard grant form, and it can be changed if the client decided to add or remove charities. In this particular case, the 5% minimum grant has to be given out every year. So 5% is 2,500, and if, as you can see on the screen, that Alex Jones decided to give that money to three different charities, and this amount can be changed every year if it's that on the basis of the client direction. So if you Alex Jones, like Alex Jones can even more fair account and beneficiary, like one other thing that Alex Jones can also consider, can even name the Jones Family Charitable Account as the beneficiary of the life insurance policy, and make the beneficiary own the policy, but name the beneficiary is the what you call the foundation as a beneficiary, and also the beneficiary of the leftover balance of the RIF account, which is called Registered Retirement Income Fund, in her final contribution. When she passes away, both strategies result in a tax credit that can be applied against Alex's state tax liability. Alternatively, Alex could make a contribution in the form of charitable gift to her account through a bequest in her will. When she will make the life insurance as the beneficiary to her foundation, that 50 if assume the $50,000 death benefit is paid to the foundation, they will issue the tax slip for 50,000. That slip can be used in her final tax return, or year prior, or in the state return. Same thing in a RIF account. When the RIF account, it will be slightly different math, because the RIF balance will be included in her final return as an income. And if the RIF balance was contributed to the foundation, that tax credit should 100% offset the tax liability, which is occurred due to the RIF income inclusion. So in both cases, the tax outcome can be quite beneficial. So now, once the account has been established and is well on its way, you can choose to donate each year, to add or your before it, and increase the value of the account number, and you can add the number of the grants to number of charities, and also again, each additional donation must be minimum 500, and you can make extra donation can make the value of the charitable account bigger, and the more grant is available to given to the your favorite cause, and you can update the charities on an annual basis. That's it for today's video. If you enjoy watching and have any friends or colleagues or family member that might find value in this video, please feel free to forward this on. Also, if you have any question or comments on this topic, and if you can, if I can be any further help to you, to please do not feel hesitate to contact me. Thank you very much. We will see you next time. Thank you very much. Have a great